$3.7 billion for a glass manufacturer. I read Apollo's press release 3 times, Nate. They say renewable synergies, but they just bought a legacy windshield maker.
Oh, come on, you're missing the grid modernization angle.
It's private equity trying to make glass sound like deep tech.
Better than Grab bragging about their Food Panda buyout. They just waited for regulators to block Uber's $950 million bid and swooped the scraps.
Hey, capitalizing on your rival's antitrust drama is a valid strategy, but let's look at how Apollo is actually making this glass math work. The rundown.
So Olympus Partners just flipped EyeSouth's retina business to Cencora, $1.1 billion.
Just the retina business. They literally carved out the eyeballs.
That is exactly how my old managing director would pitch it. Carve out the eyeballs, maximize the multiple.
It is a brilliant carve-out, though. Cencora gets the high-margin specialty distribution without swallowing the entire clinical network.
Speaking of swallowing things, Grab is eating Food Panda Taiwan.
This is absolutely my favorite regulatory comedy of the quarter.
Uber tried to buy Food Panda Taiwan earlier this year for $950 million. Regulators blocked it.
Right. Anti-monopoly concerns. So Grab just swoops in and takes it for a massive discount. Momentum Works is calling it a strategic steal. Grab basically stood outside the regulatory office with a catcher's mitt.
Sometimes it pays to be second in line. Let us talk about Isracard. They're picking up Esh Bank at $130 million valuation.
A digital challenger bank that has not even launched yet. Paying that kind of premium for pre-revenue vaporware? We are right back to 2021.
No, we are not. You are looking at the zero revenue, but you need to look at the licensing. Isracard is buying a banking charter on a silver platter. That saves them 3 years of bureaucratic nightmares. $130 million is cheap for a time machine.
I disagree entirely. They are buying a tech stack they will inevitably have to rebuild in 2 years anyway. You do not spend 9 figures on a shortcut unless your core business is absolutely terrified of falling behind.
Terrified businesses make the most motivated buyers.
Or the most reckless ones. Kind of like the impact investing space right now. Have you heard the whispers about the major funders twisting arms?
The forced marriages, yes. Funders are heavily pressuring these small field-building organizations to consolidate. Merge into bigger entities or lose your funding.
It makes sense on paper. Consolidate the overhead, but you cannot force culture fits.
Brutal but efficient. Sort of like Capitaland Ascenda's R8, dropping over 1.3 billion Singapore dollars.
Huge push into the Japanese data center market. Everyone wants Japanese tech and infrastructure right now.
Which is the perfect pivot to our main story. Because if we are talking about massive foreign capital flooding into Japan, we have to talk about the $3.7 billion piece of glass in the room.
Apollo Global Management taking Nippon Sheet Glass private. The big one.
$3.7 billion for a glass company. If you told me 10 years ago Apollo would be dropping that kind of cash on Japanese sheet glass, I would have asked what you were drinking.
I mean, it is not just windows for your Honda Civic, Nate. Nippon Sheet Glass is a massive play on renewables. Solar panels need very specific, highly engineered glass. Apollo is buying an energy transition asset. They are just doing it through a legacy manufacturer.
Sure, but the press release leans heavy into the automotive sector too. And that is exactly where I think they are catching a falling knife. Margins in auto supplier land are brutal right now. You have EV tariffs flying around, supply chains shifting.
You are looking at the wrong piece of the pie. Automotive is the stable revenue paying the debt service. Renewables are the actual growth engine.
Stable revenue, global auto production is stalling. I am looking at this $3.7 billion price tag and thinking Apollo overpaid for a cyclical business masquerading as a green energy play.
See, I read the actual historicals. If you strip out the legacy architectural glass business, their margins on the specialized solar glass have been growing double digits. Apollo knows exactly what they're doing. They are going to restructure the slow growth stuff and ride the renewable wave.
You really think they can carve out divisions easily in Japan? Corporate governance there is changing, yeah, but aggressive private equity restructuring is still incredibly taboo. You cannot just walk into Tokyo and start slashing headcount like it is a Rust Belt factory.
They do not need to slash and burn. They just need to be patient. Japanese debt is still practically free. Apollo is borrowing in yen, buying a cash-generating asset, and waiting for the solar upside. It is a brilliant capital structure play.
Okay, banker hat on for a second. The leverage math works beautifully. Japan is the last bastion of cheap debt. Every mega fund is looking for an excuse to deploy capital there. I just worry about the actual operations. PE guys running a heavy industrial glass plant usually ends in tears.
They are bringing in operating partners. This is their biggest private equity venture in Japan to date. They are not winging it.
I guess we will see. Apollo just found a very shiny, transparent excuse to plant a massive flag in Tokyo.
Did you seriously just call a glass company transparent?
I had to. I am contractually obligated to make one terrible dad joke per deal.
That was physically painful.
You loved it, but look, if we are talking about clear vision, we should probably talk about what Olympus Partners just did over in the healthcare space.
Oh, please tell me you're not going to make an eye pun.
I make no promises. $1.1 billion says I can. Voices. Momentum Works is calling Grab's play for Foodpanda Taiwan a, quote, strategic steal.
I saw that. I mean, sure, it's cheaper than the $950 million Uber tried to pay.
Tried and failed. Regulators completely bricked that Uber deal earlier this year.
Exactly. So why is everyone cheering for Grab here? If the antitrust watchdogs hated Uber buying it, they're going to put Grab under the exact same microscope. Calling it a steal feels premature when you haven't even cleared the regulatory hurdles.
Because Grab is playing the vulture perfectly. Uber did the heavy lifting, took the regulatory bullet, and now Grab swoops in at a discount. It's classic opportunism. I love it.
You would? But speaking of forced marriages, did you see the gossip leaking out of the impact investing world?
The foundation drama?
Yes. Major funders are literally twisting arms behind the scenes. They're telling these smaller field-building organizations to merge or lose their funding, consolidate into massive entities, or starve.
Nothing says making the world a better place like a hostile nonprofit takeover.
Right? It's ruthless. But the analysts are just as dramatic today. Look at what they're saying about Hudbay Minerals buying Arizona Sonoran Copper.
Oh, the quote about resetting valuation expectations across the entire copper mining sector.
Which is absurd. One deal doesn't reset an entire global commodity sector.
I disagree. When a premium like that gets paid, every single junior copper miner updates their pitch deck the next morning. The baseline moves.
The pitch deck baseline moves. The actual math doesn't. We'll see if the market actually pays those premiums.
Fair enough. Speaking of things actually closing, we have some regional bank action on the docket tomorrow.
Boston Spar Bancorp and NBC Bancorp, they finally got their shareholder approvals.
Keep an eye on that close and watch the French cybersecurity space too. Econobs has a hard March 31st deadline to lock up their Chimere acquisition.
We'll see if they can beat the clock on that one. Spill the tea?
I just love the absolute schadenfreude of the Grab and Foodpanda situation in Taiwan right now.
Oh, Uber has to be furious. Regulators blocked their $950 million play for Foodpanda earlier this year, and Grab just waltzes right in.
Waltzes in and gets a massive discount. Momentum Works is calling it a strategic steal. Uber did all the heavy lifting, took the regulatory heat, got blocked, and Grab basically buys the house out of foreclosure.
Look, I agree it's funny, but let's be fair to the regulators here. Uber already dominates rideshare there. Letting them swallow Foodpanda was a glaring antitrust trap. Grab is playing it smart, but Uber was just being arrogant.
Arrogant? Maya, it's called synergy. You sound like a competition lawyer right now.
I sound like someone who actually reads market concentration thresholds, Nate. Uber's legal team should have seen that block coming from a mile away.
Fine. Speaking of forced marriages, though, have you heard the rumors leaking out of the impact investing space?
The funder arm twisting? Yes. It's getting incredibly messy behind the scenes.
Messy is an understatement. The major check writers are basically holding funding hostage. They're telling these smaller field-building organizations to consolidate or starve. They want fewer, bigger entities to deal with.
Which completely contradicts the entire ethos of grassroots impact investing. You can't just roll up nonprofits like they're regional dental practices or HVAC companies.
Why not? Economies of scale work for charities too. Reduce overhead, streamline the back office. As a former banker, I actually respect the ruthless efficiency of it.
You would. But wait until you see the culture clashes when you force three rival do-gooder founders into the same C-suite. It's going to be an absolute bloodbath of passive aggression.
I can't wait. We need a Bravo reality show for nonprofit M&A.
I'd watch that. But if you want to talk about actual ruthless efficiency, we need to look at what Apollo is doing in Japan. $3.7 billion for a glass company is no joke. Tomorrow's radar. I'm keeping my eyes glued to Taiwanese regulators tomorrow. Grab is swooping in on Food Panda Taiwan.
Talk about a strategic steal. Uber tried to buy that exact asset for $950 million, got blocked by regulators, and now Grab gets to play the white knight at a massive discount.
White Knight is a massive stretch, Nate. They're just the only buyer left at the auction who won't trigger an immediate monopoly red flag.
Hey, opportunistic pricing is still a win. Speaking of tight timelines, you watching the French cyberspace tomorrow? Econops has that strict March 31st cutoff to finalize the Chimere deal.
Honestly, no. I'm way more interested in the nonprofit drama. My inbox is full of whispers about major impact investing funders literally twisting arms to force field-building organizations to merge.
Wait, really? The impact crowd is doing forced consolidation now? That's amazing.
The funding is drying up, and the check writers want fewer, bigger entities. It's the private equity playbook wrapped up in a save-the-world bow.
I love it when the do-gooders start acting like ruthless bankers. Makes me feel seen. We should definitely dig into those nonprofit term sheets next time. But right now, we need to look at Apollo's massive play in Japan. $3.7 billion for a glass company.